Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 27th of October, 2025. My name is Mark Gardner. Investor optimism was sky high Friday night, and will probably be even more sky high in the stratosphere as we got we got US-China trade deal progress over the weekend. So essentially, we are getting, it's the perfect storm in terms of investor optimism being sky high on rate cuts, sky high on US-China trade deal, and I dare say that we will continue to have very, very positive sentiment for at least a few days. And we've got one of the big things this week, particularly, is we've got, I think, 4 or 5 of the Mag 7 reporting earnings, and we essentially need to digest all that data. That'll sort of come towards the middle of the week. But as you can see here, we had pretty positive equity markets. The light blues, are the weekly numbers. So you've got Asia basically up about 3.6%. The Aussie was about flat, but I would imagine that we can play a little bit of catch up yet again. Particularly, we had the air sucked out of that trade deal with the US on critical minerals pretty quickly. It's just typical Aussie pessimism. But as you can see, nearly all the technicals are very, very strong here. And you've got the US basically up around 2 to 2.5% for the week overall. Most of it in that back half of the week. The Dow, I believe, was the first time it ever settled above 47,000. Not that we pay too much attention to the Dow, but with records generally across the board. Now, this was all on the back of CPI numbers. There is issues with this, with getting too optimistic over this, and I'll run you through the reasons why. We very much 2% was the target from the Fed, which they've abandoned because of probably because of political pressure more than anything else. And it was expected at 3.1 and we got a 3. And then investors have gone, yeah, all clear, green light, we're going to get heaps of rate cuts. And then we had one of I believe it might have been Waller, came out and basically said that there's going to be 100 basis points of rate cuts as well. What you've got to take with a grain of salt here is that they all know Powell's going, and they all want Powell's job. These Federal Reserve governors, and they all know that if they're auditioning for the job, they've got to, when Trump appoints it, that they've got to talk rate cuts. So, again, probably need to take that with a grain of salt. But also, 3% inflation is still a problem. I'm not entirely sure at what stage we decided to change economics books and think that 3% inflation is okay. It's not. And basically, in any market prior to 2007, the talk would be how much are we hiking, not how much we're going to cut rates. There's a lot of numbers out there at the moment about credit card defaults, credit cards in arrears. There's bits and pieces of small private credit funds having defaults. I think there was another one that was about $1 billion over the weekend, and it's not. I mean, I know that's not a lot of money these days because of the inflation, but it still means that there's starting to be issues as well. And there was a fair bit of talk around, actually. JP Morgan did a $38 billion cap raise or debt deal, bond deal for Oracle, and essentially, it's frightening that their debt, debt to equity ratio is like 500%. So, I mean, they have done well, and they do have a lot of forward business coming, but still 500% is pretty alarming. So, as you can see, the chip sector overall doing pretty well. Nvidia up 2, Google up 2 and a bit, or 2.7. AMD was up 7%. Broadcom up 2.8. Netflix still drifting off. The technical momentum pulled out of that. It's down 1.7. I'm really liking Netflix down here just for the forward plans. It doesn't necessarily mean it's a buy. And it's, I think it's certainly one to have on your watch list. IBM headed higher as well, about 8%. There was some earnings corporate news on that. Tesla was down 3.5%. So essentially we're not going to get too much out of Tesla until that November the 6th AGM. And Elon's lobbying to get shareholders on his side because the passive income fund, the passive ETF funds own so much of Tesla stock that essentially he needs to get this pay thing through overall. So that was really it. I mean, the oil companies were down a little bit, but broadly it was just an up market overall. And yeah, again, more of the same. I'm going to keep it pretty short this morning, folks, because I think there's not. It just really is around the market's just decided that 3% CPI is okay, and that's going to trigger rate cuts. US and China are going to do a trade deal. So I did go through and confirm which bits and pieces were actually confirmed by the Chinese, because Trump has a bad habit of essentially announcing deals that haven't happened. Because this is about the third or fourth, I would say, time that they've announced a trade deal definitely done with the Chinese. And the first 3 times, one thing that really helped me was basically went and checked whether the Chinese had confirmed it, and they hadn't. And then here we are. So, we're basically, the US, I think the US ambassador from China as well confirmed. There is a preliminary trade deal framework under which China will delay rare earth export controls and increase agricultural imports, and the US will suspend new tariffs. So basically, we're going to go back to what it was before Liberation Day, which is really just, it's quite frightening, to be brutally honest, that we're just all we're doing is going back to where we were before. But US agricultural imports, while the US will suspend new tariffs to the current extent, and the pledge of cooperation restricting fentanyl precursor exports is a big sticking point as well. So this has still got to basically this has still got to happen. Essentially, they're at this APEC summit in South Korea this week, and they've confirmed that the meeting's going to happen. They've confirmed that there's a preliminary framework. Trade deals, just for context, trade deals normally take 3 years to do. So, look, I know Trump works fast and he's from the private sector, but the likelihood that, that you're going to get a trade deal, signed, sealed, delivered with all the details in it, in a week is probably a little bit foolish. But, at the moment, this is bull market mode. And unfortunately, the bears can complain all they want, or you can point out the risks all they want, but it is just melt up mode. So I think we're up 40% since the April lows. And this would be one of the best 6-month rallies pretty much ever seen. This would beat COVID, and it's quite extraordinary. And there is pockets of the market, particularly the larger cap, that it is potentially justified. And we will find out this week, because we've got Microsoft and Meta on Wednesday, and that'll be Thursday morning, our time. It'll be after the bell. And then you've got Apple and Amazon on Thursday, which will be our Friday morning. So we'll be very busy towards the end of the week. And United Health's another one that we'll be looking out for, which will probably report before the bell tomorrow night, Tuesday. And, you've got a speckle of a few other, Eli Lilly, Merck, Caterpillar, Intel, Shell, Chevron, Aon, ExxonMobil, etc. So we've got quite a few, quite a lot of corporate news. So generally, and we don't get major market movements when there's earnings on, because everyone's kind of waiting earnings. But I would say once we get past this, once we get past the Friday, it does really clear the way for the market to make some form of move. We haven't had payrolls numbers. I mean, I'm really surprised those CPI numbers came out on Friday night. They reckon that there's a very high chance that there's 20% less of the normal data was actually pulled in just to get a number out. So look, there could be revisions, the same as there's been revisions with the CPI numbers. So with the payrolls numbers, but I mean, Friday week, so not this Friday, but next Friday, we're supposed to have another payrolls. So it'll be interesting to see where they can get themselves organised, because we're almost we're nearing day 30 or the late 20s of this government shutdown. 34 days was the last one, and it cost the US economy over 11 billion. It'd be interesting. This is going to slowly start to grind on markets overall. I think this has the potential at the moment. The rate cut optimism and the Chinese trade deal optimism has the massive potential to be a little bit of the last sucker play for the buyers and really drag people in. We're going to remain pretty cautious overall, and we'll just see what we can see. So just a quick one on the commodities. Gold and silver stabilised. They were down heavily early. Copper keeps going. Now, there's a lot of noise around copper at the moment, and I think that's probably the one that's going to will break out, because we had precious metals pull back significantly last week, and copper just kept on powering. So it's up 3% for the week, up 1% on Friday night. And Trump changed a law or repealed a law about copper smelting in the US. So crude was up about 6 for the week, but that's just cartel export controls. Lithium jumped back up, uranium jumped back up. Lithium was up for the week. Uranium still remained down 3% for the week. Coal's still drifting around. Bitcoin making a bit of a comeback as well, up 3% and up 6% for the week. That pretty much wraps it up, guys. As I said, I'm just going to keep it short. Don't expect too much on the ASX today. Probably, look, it'll just be optimism plus or optimism squared. So have a great day, guys, and we'll speak again tomorrow.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.